compared to 1950 versus 2022, the volume of global trade has increased by over 4,500%. So that is more than 45 times what the value was back in 1950 at the time of Pakistan's creation. And if you kind of zoom in a bit more into that, you will notice that majority of that growth in the volume of global trade happened between 1980 and 2022. So in 1980, the volume of global trade, the amount was around $2,000 billion. Today, it's $25 trillion. And what has happened within these last 3 to 4 decades was one of the big things that happened. In 1978, China, our friendly neighbor, adopted an open and reform policy where they opened up their economy. They became more liberalized. In 1991, India adopted economic liberalization. They too opened their economy, and at that time, India was also engaged. It was involved in an IMF program similar to that of Pakistan, but they went through major reforms, and after that, they never felt the need to go back to the IMF. And today, if you look at India, their foreign reserves stand at $600 billion. China, over the course since the country opened its economy, it was able to lift 800 million people out of poverty. Its GDP has averaged over 9% since then per year. So this highlights the impact that global trade and opening up your economy has had on the world and on some countries who've been able to really optimize on those growth objectives. But the key difference here is that when the world was opening up, global value chains were integrating very strongly with each other. There were certain countries who I would say were visionary enough, or who invested in low cost manufacturing, who increased their capacity building productive capacities with the idea that they wanted to tap and capture global markets. So they felt that there's a consumer market beyond their national boundaries, and they should really capitalize on what they have to offer. And this is where Pakistan stumbled a bit, because we've read this in our economic history books that Pakistan was one of the leading countries in South Asia in terms of GDP growth. The economy was flourishing, but then it halted for a bit, and then it has been declined. And the reason is because when the world was opening up and there was such an exchange of global goods and trade and whatnot was happening around, Pakistan, rather than doing the same what India and countries like China did, Pakistan became an import-oriented economy. So we, rather than enhancing our productive capacities, we started buying goods in large commodities. And now when we look at it today, the same pattern was followed through by various governments who came in through the 80s, 90s, 2010s, and 20s now as well, that Pakistan is producing less, has less to export in the world, is dependent on imported goods. Even the raw materials that it needs for the production of certain goods that we do produce in the country are being imported. So over time, a huge trade deficit came into being, and a huge balance of payment crisis arise because of that. And now we've very much been drained of all our foreign reserves. And when a country loses its competitiveness, it becomes dependent on bilateral loans, on multilateral partners, on other countries to bail itself out. It loses that sense of autonomy that we see in the form of IMF and other related programs. But more importantly, it loses the capacity to pay. And that is what has been the crux of Pakistan's issue. So everything that we're importing, and those are some very significant goods. For example, we import energy, we import oil, we import petroleum, but we don't have, there's no way to circumvent it. So all in all, this has completely drained Pakistan of its, foreign reserves. And that is the bigger major issue at the moment. And when we talk about the currency crisis, currency works in a very similar fashion. So the more your currency is in demand, the higher its value is, in simpler layman terms. And the more you demand a foreign currency, the more strengthened the other currency becomes in comparison to yours. And because when you don't have goods to trade, to sell, then obviously your currency is not demanded as such. There's no value of PKR because other countries, they don't feel the need to buy much from Pakistan because Pakistan does not have much to sell. So automatically your currency starts depreciating, it starts losing its value. And that has a multifold impact on Pakistan because it tends to highlight even more inflation in the country. Because, like I said, when we are importing so many goods, we're importing oil, we're importing energy, we're importing our staples, we're importing wheat, and when we're importing stuff, usually in global trade, you use the USD to pay, and the USD becomes much more strengthened in comparison to the Pak rupee, and therefore, when the price of USD goes up, the price of everything in Pakistan goes up. That is, again, very much linked, the currency crisis, how it's linked to your trade deficit and how that is linked to the inflation in the country.
Thank you for giving us a rundown, Nauraiz, because I'm actually glad you mentioned this since, the very onset, we've sort of had like a Western orientation. And even now we see that in IMF's manifestation in many ways. And even in the beginning of this 2023, we saw that Pakistan was facing severe economic crisis and we were almost on the brink of default. And I understand that IMF's 2019 loan program, it had stalled due to this Pakistan's perceived lack of, reform commitment, which led to a halt in loan disbursements. And then ultimately we saw sharp declines in foreign exchange reserves, like you mentioned. And then at some point we were only covering about 2 weeks of imports amidst all, the debt repayments that were happening simultaneously. So, and then to avoid that, we saw that, Pakistan started imposing import restrictions, which caused economic shutdowns of its own. And then we saw commodity shortages of very important staples that, like energy and wheat. And then we saw record high inflation. And then we saw that, by June, IMF introduced a $3 billion standby arrangement as an emergency measure, which was then supported by Pakistan's Middle Eastern partners and then China. So while we can say that, the default risk may have receded, we can't deny that IMF imposed conditions for structural adjustments. They do have consequences of their own, such as the withdrawal of subsidies from fuel and energy sectors. It has resulted in certain policies like, rising electricity prices. And then, like you mentioned, our currency is somehow in a free fall, and that has a direct bearing on our inflation as well. So as far as I can see, IMF and its conditions, they've sort of exacerbated the current crisis, and its focus on preventing that foreign liability default, it's led to policies like, rising electricity prices. So my question is, why is Pakistan still, the 23rd time around, why is it still so insistent with this program, and why do you think that the governments, they're reluctant to defy the IMF? Instead, they would go for negotiations and negotiations instead. And then, most importantly, do you think that institutions like the IMF, can they truly help countries like Pakistan, or do you think that there can be alternative paths to economic stability that challenge the very notion of this neoliberal dependence that we've had since the beginning of time?
Well, thank you so much for bringing that up, Ramal, because I think that is very crucial to address. What we usually tend to do in Pakistan, and actually everywhere in the world, everyone does, every human, we tend to picture the world as black and white as much as we can, so we can avoid the gray areas. And the way the IMF program works, or the IMF as an institution works, that is what we tend to do as well. The critics would tend to highlight that IMF hasn't done much good for Pakistan. Pakistan is going back to the IMF for the 23rd time. And this has never helped Pakistan flourish economically ever before, and there's unlikely that it would help Pakistan going in the future. To some degree, there's a level of truth to it, to how I see it, because you need to understand, all of us need to understand that the purpose of the IMF is not to help a country stand up on its own two feet, in simpler terms, economically. How the IMF works is the IMF, as an institution, it tends to help countries who are facing short-term liquidity constraints. So Pakistan needs to import. Import is a crucial lifeline. We need to import wheat, as we've seen in the past few years. We need to import oil because we do not produce oil. and that is our most prominent form of energy consumption. But when you do not have the means to pay that, you don't have that sort of liquidity, IMF, the purpose of the IMF would be to come in, bail a country out, help them for a period of, with the understanding that it's a short-term liquidity loan, and so that the country can address its structural issues in the meantime, get its house in order, and then it can be self-sufficient. By that, I mean that it will not need to rely on the IMF. So when we look at India, and the example that I quoted earlier on was that India was going through a similar crisis back in 1991 when they had to go to the IMF. They implemented, major reforms that were advised, suggested by the IMF. But in the same time, they made some own rectifications, and they were able to build the economy from ground up, from within. And there was no need for them to go back to the IMF ever again. And today, their foreign reserves are at $600 billion, while we are negotiating for loans as little as 3 billion, 4 billion, 1 billion, so on and so forth. So when we look at that, IMF doesn't sound too bad. So because IMF extends you a short-term loan, it also looks at ways on how it needs to secure ways on how it will be able to get that loan back. So it levies structural adjustment programs, and those structural adjustment programs are like bookkeeping programs. So where it will tell you that here you need to get more taxes, you need to levy a certain amount, you need to this is how you need to tax your economy. These are certain gaps. This is where you need to take austerity measures. You need to reduce your fiscal expenditure, your spending that you're doing. How do you need to address your internal debt, your public debt, things like that would help the country in that short term to medium term kind of balance its account, and that will be able to repay the loan. But for an economy to actually get out of this cycle or that dependency on IMF, there's a lot that needs to be done. You need to invest in human capital, you need to invest in education, you need to have a long-term policy plan that looks at the next 10, 15, 20 years, and so on and so forth. And what we've seen in Pakistan is that there's no consistency. Whenever there's one government replaces the other, there's a whole new complete package of policies that they bring along with, and they denounce the previous ones